One of the big issues facing the future development of the African continent is, of course, infrastructure. It's estimated that Africa needs about $93 billion in infrastructure investment every year to boost its GDP. But so far, it's falling short. Investment has been going in at about $45 billion, and the funding gap is something that delegates here at the Financial Times African Infrastructure Summit have been discussing, along with other challenges. Solomon Asamoah, Vice President of the Africa Development Bank, is optimistic about the future of infrastructure investment flowing into Africa this year.
We kind of go to about 60 to 70 billion we anticipate this year. Competition, if you like, from the Chinese as well as other private sector sources, which I think is good for Africa. And the fact that there are pretty low returns elsewhere in the globe and you can get a yield pickup in Africa also adds to the attractiveness. And then you now have serious players, serious financiers looking to deploy their capital. The number of global private equity funds now that have operations covering Africa has quadrupled over the last few years. So there's sources of equity, which has often been a missing piece.
And David Donaldson, head of Infra Ventures Africa at the International Finance Corporation of the World Bank, has some interesting perspectives on how to get even big projects or huge projects off the ground in Africa in spite of all the challenges.
We have seen in the market, I would say, the level of PPP, private-public partnership projects, going from around $1 billion a year several years ago to maybe $3-5 billion a year now. So a significant increase. Transformational projects have been on the African agenda for forever. Cape Cairo Railway, the Inga Dam, 40,000 megawatts of potential power, has been known about since, I think, just after the Second World War. They're hugely challenging. Governments don't have the public resources to be able to finance them. Private sector investment has not yet reached the level where it can support transformational projects. The risks have been perceived to be too high. However, as Africa has become more familiar with PPPs, governments are starting to think a little bit more ambitiously. And whether it's gas discoveries in Mozambique and Tanzania, or whether indeed it's Inga Dam. They are now, I think, on the agenda.
But of course there are many challenges and risks. There's project risk, economic risk, political risk that Taz Anvaripur, who's Chief Executive Officer of Africa 50, an initiative at the African Development Bank, is grappling with on a daily basis.
I think one of the biggest issues is lack of well-prepared projects. Today, there is not enough pipeline for the financiers to invest and finance those projects. And secondly, the preparation of project or bringing to bankability requires quite a bit investment from the governments or from early risk takers. Today, in Africa, a project to come to bankability is 7 to 10 years. Because of this long time frame, the cost of preparing a project is actually almost 10% of the total cost. Private sector or private investors or financial institutions, they are not willing to take this risk because they are not 100% sure how quickly they will be getting back this risk capital with a return. Africa 50 is a tailor-made solution for African infrastructure. In fact, African Development Bank in the last 6 years financed 49 infrastructure projects, either purely private infrastructure projects or public-private partnerships. So far, none of the projects, they failed. But having said that, if you look at the other indicators, I believe that there's a misperception about the risk in Africa. Moody's looked at 4,500 project finance transactions in the world, and 138 of them were in Africa. There was only one bad project.
So Africa, over the next 40 years, will see a population explosion of about 1.5 billion people. So therefore, the subjects that are being discussed are crucial. There is, however, a sense of optimism among many participants that these challenges can be overcome. James Kynge, Financial Times, London.